Higher interest rates will mean indebted consumers will feel the pinch as their debt repayments increase. Inflation has been on an upward trajectory following persistent high oil prices that led to high fuel prices here at home. At the November sitting, the Monetary Policy Committee said it expected inflation to average 4.3% this year. But some economists believe this may be revised upwards. Administered prices like electricity, water and municipal rates, as well as global oil prices, remain key risks to inflation going forward. The Reserve Bank said its projection model showed possible hikes in the repo rate of 25 basis points in each quarter this year.
The primary reason being the elevated inflation rate. We saw inflation coming in at 5.9 percent in December, and the average for the year as a whole is 4.5%, although that is banging line with the midpoint of the Reserve Bank's target. The concern is about rising inflation. Inflation is expected to remain higher for quite some time. And of course, looking at global factors, the normalization of interest rates has started, and the major central banks have already indicated that they will hike, particularly the U.S. Federal Reserve. It is expected to hike as early as March this year.
There are some concerns, however, that the higher interest rates will have a slowing effect on economic growth as higher debt repayments takes away from the disposable household incomes. Although rates are expected to increase gradually over the medium term, experts say it will take some time before rates are at pre-pandemic levels. Others, however, say the Reserve Bank should take its time before continuing to raise rates.
South Africa does not have a consistent investment confidence. And in the next coming month, or in the month of January and in the month of February, South Africa will inconsistently go in the same trend as it did in December. So I don't believe that we can only use what happened in December to take a decision that will affect people in general, while we are sitting with like really a situation of poverty in South Africa that is above 60%, and unemployment that is really unmanageable at the current point in time. So I will expect the Reserve Bank to hold the repo rate in spite of what might have happened, but we look at the trends for January and February, and then on the May sitting, and then we can see whether we review, if on May we review to a 25 basis point, it will be fine.
Stats SA will release the December data for producer inflation this week. It's expected that the producer price index, measuring price changes at factory gates, will come out at 9.9% compared to 9.6% in November. Inflationary pressures will likely come from high fuel prices. Gloria Sefako Mosi, SABC News, Johannesburg.